Hi, I'm Dr. Kevin Milo, and you're listening to the Physician Empowerment Podcast. At Physician Empowerment, we're focused on transforming the lives of Canadian physicians through education and finance, practice transformation, wellness, and leadership. After you've listened to today's episode, I encourage you to visit us at phys-empowerment.ca, that's PHYS, empowerment.ca, to learn more about the many resources we have to help you make that change in your own life, practice, and personal finances. Now on to today's episode.
All right, so welcome everyone. I'm very excited to meet everyone here. So welcome to this very exciting episode. Every episode is exciting, but this one is really, really exciting because there's something that piqued my interest a number of years ago, and that's called a critical mineral tax credit, right? And there's a tax credit, but it's something so critical, right? So I've been exploring in this space for a while, and I'm really excited to have a very special guest, Nicolas Johnson, joining us tonight. And Nicolas has a very diverse background, and he has lived in multiple continents in the world. I'm an immigrant, and I'm really excited to meet Nicolas. And so, Nicolas, thanks for joining us. And I read that you have lived in Paris and in Tokyo. Right. And what were you doing there? You had some journalism background, investment banking background. Like, you have such a diverse background. Tell us a little bit about that part of your life.
Yes, thank you very much for inviting me tonight. I'm really thrilled to be here as your guest. So I was born in Paris actually, and then moved to Toronto as a baby. So I'm also an immigrant, and went back to France, to Paris as an adult to follow a woman, actually, who became a very, very dear friend, and then studies, and ended up working for a company called Bloomberg News, which is a big financial services and financial information.
Huge.
So if you're into finance and investing and that kind of thing, you're just financial information and news, you probably heard of Bloomberg. Worked for them as a reporter for 7.5 years. It was an incredible experience. And then I wanted to move to Asia and asked them for a transfer, and that eventually happened. So I lived in Tokyo for 4.5 years, working for Bloomberg as an editor there. And that was also, incredible. Absolutely phenomenal experience. Not only working for that company, living in Tokyo I'm a 6'2" Caucasian guy living in Tokyo. So it also very, I stand out, obviously not a local.
You do. Sure. And then so you've worked in different continents. You're in the finance industry, in reporting, right? Journalism, and then you ended up in Canada, right? And so you're now in the space of this critical mineral tax thing.
Right. So I came back to, I was away overseas for about, at the time was about 17-ish years or something like that, which was most of my adult life at the time. I've been back in Canada for 15 years. And just less than a year ago, at the end of last year, I joined a company an investment fund. And this investment fund is focused on the it operates within the Canadian government's flow-through share program. And I think that's how we connected. So I've been working for them, explaining the product to financial advisors and myself learning about the product. And I guess that's also the tie-in there's a critical mineral component to that product, which I guess is what you're interested in today. And it's fascinating. It's really incredible. It's hot. It's a really hot topic at the moment.
Yeah, so let's dive right into the topic, right? So I think there are a few lines of thoughts, right? One is there's a lot of geopolitical shifts, right? Superpowers, tectonic forces. I think there's a tariff war going on. And then we are Canadians, we're forced to look west, look to Europe, right? Look to Asia. And then suddenly the world seems changing. Hey, people want our minerals, right? Suddenly the big guy down south want our minerals. Everybody else want our minerals, right? So the minerals are hot, right? And then there's some tax credit. So can you explain just at a high level, why would CRA offer incentive in this space?
Yeah, sure. So I would say, I'm going to make a little joke here. CRA is offering it because it's the law. The government made it the law. But then the question is, well, why did the government make it the law? The government made it the law in so just some background so that the question fits into the context. The Canadian government back in the 1950s created this this tax incentive program called the flow-through share program back in the 19th. This is going to be a short history. We're not doing a lecture on this. But so the Canadian government creates this program back in the 1950s to encourage investment in the resource industry. And it morphs over the decades and changes a little bit, and it becomes available for individuals, really explodes for individuals in the 1980s. And then in 2000, there's a mineral exploration tax credit that gets added on to make it even more attractive for individual investors. And then in 2022, just 4 years ago now, or in the fourth year, there's this critical mineral exploration tax credit that gets added on to make it even more attractive. And the thinking, when you look at the government's statements at the time, why did they do this? Well, they want to encourage investment and exploration, development, production of critical minerals. So what's a critical mineral? It can mean anything to anybody. So it depends, well, what makes it critical? Well, it's critical for the economy, for certain industrial processes, for manufacturing. And you think, well, what also can depend on geography, like, well, who controls it? Is there a supply risk? Are these things located in a country or in a place in the world that's hard to get to? Or maybe a government that doesn't want people to have it? Or maybe it's like in the middle of, a lot of these things are in the Canadian North or China, hard to get to, hostile environments. So there's different things. And the reason they're critical is because there's no known substitute, or there's no practical substitute. So these are and to give you an example, so in the context of the flow-through program, there are things like copper, nickel, lithium, right, related to the low carbon economy.
Batteries.
Absolutely. Batteries, electrification, aerospace, defense, the kind of like advanced electronics. There's all these products, and the list, there's all sorts of like scandium and titanium and uranium and zinc and magnesium. Now there's the list. You can put anything you want in the critical minerals bucket. However, in the context of the flow-through share program, the Income Tax Act has this defined list of 15 minerals that for which this tax credit applies. But where does it get confusing? Well, the Canadian government has this other program, this critical mineral strategy, that has 31 minerals. So it's a lot more. And the Canadian government has one definition, while the US government might have another, and the German government might have another, and the Australian government might have another. So it's not really this, everybody who calls it critical minerals will have their own definition. The one I'm most familiar with it's how it fits into the Canadian government's flow-through share program, with that incredible tax credit when you invest in critical minerals. And we can talk more about that if you want.
Right on. Let me just do a little bit of clarification. Right? I've been following commodities for a while, like gold, silver, like nickel, cadmium, you name it, right? All these guys that are called critical or not, but they are just going up and up and up, right? And because going into AI world, it's the newest human tech revolution yet. Everybody's fighting for energy, fighting for parts, right? And there's international power wars, right? You're right. So that's why there's such incentive for us, for Canadians, right? And if you just buy the stocks, I don't think you're going to get any tax credits, right? But if you buy it through a flow-through share, right, then there's a lot of perks. So maybe, just give it up. Like, let us know what's the juicy tax credits.
Sure. And just before we do that, this might be interesting also, like, why should I care about this? I'm going to just give some context here. I'm looking at the S&P TSX index today. It's up. The S&P TSX Composite Index, which is kind of a benchmark for the Canadian stock market, it's up. It's up as we speak today, as we're recording this, 22.5%, according to the website. I'm looking at a critical minerals ETF, and you told me that you don't want to mention brand names, so I'm going to keep it anonymous. But I'm looking at a critical minerals ETF, which is an exchange traded fund, which is a kind of financial product. It's up. The one I'm looking at right now is 65.91%. So benchmark index is up 22%. This critical minerals product that I don't represent, by the way, I have no affiliation to the one I'm looking at, 63%. So almost 2-3 times. So it's a huge, as exactly what you said, it's a huge thing in the world, geopolitically, financially, investors, like there's a lot of money, a lot of attention going into this. The way it works in the flow-through share program, so is when you invest in these in these minerals. If the company you invest in is exploring for these minerals, these so-called critical minerals as defined in the Income Tax Act, and if you do it in the context of a flow-through share investment, I'll explain that. There's a lot of I'm stacking a lot of details here, but the
Yes,
nuance
course,
matters. And sorry if it's complicated. So if you invest in a company that is doing exploration of critical minerals, you can be eligible for a 30% tax credit of your investment. So let's hypothetical example. You invest $10,000 in a flow-through product that has, let's say all of it is critical minerals. Well, 30% of 10,000 is 3,000. You would get $3,000 off your taxes. And so but it's actually a sweetener. Remember, I mentioned a few minutes ago that this was a boost or kind of an add-on to this existing program. The real juice, the meat of this tax product known as the flow-through share program is the income deduction. So back to this example, if you invest $10,000 in flow-through shares, you get to reduce your income by that same amount. So let's say you earn $250,000, you invest $10,000 in a flow-through shares, you would declare $240,000, right? Your actual income minus how much you invest in flow-through shares. So it's an income tax deduction.
Right.
An income deduction, you reduce your taxable income. And why does that matter? Especially people who are earning in a high income bracket, because taxes, getting crushed by taxes. We're all getting crushed by taxes.
Progressive tax system.
Well, yeah, but
marginal tax rate.
Your marginal tax, if you're in a high income tax bracket, you're getting crushed. You're paying 50% of that top dollar income. You're paying half of it to the CRA. So the government said, hey, we want to get investment into the resource sector. So let's create this tax incentive for people to invest in resources. Well, how do we do that? Well, let's give them this incredible income deduction. You invest in the flow-through shares, you get this incredible income deduction. And then you have a couple tax credits that come, and that's where the critical mineral exploration, 30% of what you invest in flow-through shares for eligible investments, right? It's a tax credit that comes right off your taxes. So,
and that's not the only perk, right? There are other perks for the non-critical, right?
Yes. So you have the income deduction, which again is the bulk of it. That you essentially huge income deduction. You don't pay taxes on that portion of the income. And then in 2000, they added a first sweetener called the mineral exploration tax credit. That was only 15% of your investment. And so they went from a 15% sweetener or booster or bonus, whatever you want to call it. And then in 2022, they added this 30% sweetener, which is specifically for investments to explore in what the government defines as critical minerals in the Income Tax Act. This list of 15 minerals.
Right. So basically for us incorporated professionals, which is most of our audience, right? So, hey, everybody's climbing up on the marginal tax rate, right? Tax bracket. And hey, this is an effective way, government approved way to actually bring down the tax load. And I can share from personal experience, when I get end of the year, suddenly, whoops, unexpectedly good problem. I got a huge capital gains. I got a bonus of something. My accountant says you made so much more than we thought, right? And suddenly you got a tax problem. When you sold something for somebody who's maybe retiring, you suddenly got boing, and it's in your corporate space. It eats up the passive grind, they call it, right? And now we don't want to turn this into pure tax talk or a math lesson, right? But there's huge incentives.
Absolutely.
No, but then you got to say, hey, it's too good to be true. What's the catch? Why would the government give such juicy incentives? So let's talk about the risk.
Yeah, sure. Well, so first of all, just to clarify, this is a government. You can Google this. There's lots of information on the CRA web pages, on the Ministry of Natural Resources web pages. It's a government program. It's a government designed tax incentive. It's in the Income Tax Act. It's 74 years old. It's hugely regulated, and it's well known. But it's the catch, I guess, is that in certain provinces, let's say I'm in Ontario, you're in Alberta. In Ontario, you have to be a so-called accredited investor. In other words, there's certain financial criteria of income or assets or liquid financial assets. you have to be in a position to be able to, yeah, basically, I'll call it, I don't want, comfortable financial position. You have to earn a certain level in order to be eligible. Some provinces, anybody can, there's a different criteria. In Ontario, though, it's strict criteria. So that's one thing. Not everybody
So in Ontario has to be accredited. Other provinces eligible,
yeah, and I believe
which they have their own definition. I don't want to belabor
exactly,
that.
yeah.
Right?
So there's different definitions in the different Talk to your financial advisor to see if it's applicable to you. But regardless of where you live, the biggest bang for your buck will be if you're earning, let's say, round numbers, more than $200,000. That's where, if you're in the 50% marginal tax rate, and I say 50%, different provinces a little bit more, a little bit less, but if you're around that level, the more you make, the more bang for your buck you will get, because the more you make, the more you're getting crushed by taxes. And important thing also, let's say the other catch here is that you can lose money. This is a risky business, right? These are literally geologists and prospectors and surveyors going into the Canadian North. These are only Canadian investments. They're in the middle of nowhere, digging holes in rock, looking for whatever it is, gold or copper or nickel or lithium or uranium or magnesium, like these essential minerals. They're looking for it. Most of them are not going to make it. Most of them, their stock price is going to go nowhere, go to zero. A few of them, though, we hope, will go to the moon. And that's what we find in our case, that it's a few winners. Most of them, do nothing or go down, but the few winners compensate for all those losers. But the risk, it's risky business. Yeah.
Sure. Let's go back a little bit on the risk side. I guess, thank you, Nicholas, for the clarification. It's not an overnight tax scheme. Somebody cooked it up in the backyard. It's not like those offshore, right? It's not one of those high risk things. This is in the tax code, right? It's in the
highly regulated,
highly regulated. So, and the reason that there's such an incentive, because this is a mineral exploration mining sector. The government is trying to incentivize private money to go in so that we can actually go and dig some of these valuable resources. In this huge thing called the Canadian North, called the True North, called the Canada Shield, right? This is world renowned, right? When we studied geography as an 8-year-old kid, right? We learned about the Canadian Shield. This is where it is, and the world is looking to us now because everybody's now looking for those things, right?
Yeah, no, it's also incredible. I've had the incredible privilege of meeting some of the people who are doing the work. Like, these are real Canadian. It's mostly men in this business. The real. It's like real people. It's not some virtual person doing it from their phone in the living room. These are people. It's a very hard hat and safety vest and safety boots kind of thing, out in the middle of nowhere, trying to not get eaten by bears and bugs and freezing to death and all that kind of stuff. And the other thing, I was just going to say something else that slipped my mind. But there's also, this is kind of topical. It's outside the realm of what you asked, but it's also topical in the geopolitical category. This is made in Canada, made for Canada. There's a because of what's happening around, with the United States right now. There's a big buy Canadian movement, investing in Canada, keeping your money in Canada, helping the Canadian economy. Well, gosh darn it, you'd be hard pressed to find a financial product that is more Canadian than this. It's for investments in Canada, being done by real Canadian people, supporting real Canadian families and businesses and jobs. So there's that. And like you said a moment ago, the government, this is actually, I think, maybe I'm skeptical of government in most cases, but this is actually maybe something the government did well. They found a way to get these prospectors and geologists and surveyors and mechanics and technicians. They found a way to get them the capital that they need. It's basically like mining startups. These are highly speculative, highly risky mining startups, and the government found a way to get them the money they need. And I'm proud to be in a business that helps these people get the capital they need to hopefully find these essential minerals.
Yeah, exactly. So I guess one point that you made, and I just want to expand on that a little bit, right? So there's this sector, this industry that is important to our economy, and there's the government incentive, but not all players are equal, right? You said this is a lot of these junior mining companies, a lot of them didn't make it big, right? So So the people who are the funds managers, right, they have to actually pick the right company, right, to give them the trusted dollar and say, hey, I think you're worth it, right? And then that's why the gamble becomes, and we each investor to their own, right? That's why we have disclaimers all the time. It is not investment advice. This is an educational platform, so you understand that for the tax incentive, what's the trade-off, what's the risk?
Right. Excellent question. That what I feel you're getting to is the idea of professional management. So if I'm going to make an exaggerated claim just to dramatize it. All of these companies are going to tell you, yeah, invest with us. We're on the verge of finding. We got this incredible deposit. It's so promising. Give us your money. Give us your money. Give us your money. They're all going to try to. Every business in the world wants to convince you to give them your money. Okay, that's normal. What the advantage of our portfolio team is, they've been doing this for 17 years. They've been around the block a few times. They know the players, they know the people in the industry, they've worked with a lot of people. One of the things I actually love about our managers is that they have I'm going to call it a high standard of ethics. There are people that they don't want to do business with, even if they think it might be profitable. There are people we don't want to do business with just because of the way they do business. So there's this professional management of knowing the industry, knowing the tricks, knowing the shenanigans, and hopefully avoiding them. And the other thing is, let's say you mining critical mineral company ABC, made that up. Let's say you want to invest in let's say they're issuing some flow through shares and you want to invest. It's hard because how are you going to find out that they're issuing flow through shares? How are you going to get them? How are you going to connect with them? And also it's risky. If you, let's say $10,000 or $100,000, are you going to put all your money in one basket? Risky and hard. The way we do it, and the way most people do it, is through a fund, which is you invest in the fund, which is structured as a limited partnership. And the limited partnership, it's a fund. In other words, there's a couple dozen companies in the fund, so we're not putting all your eggs in one basket. And it's much easier. You're investing in the fund, which is much easier than going out and finding a company that's issuing shares and buying the amount that you want.
It's like buying ETF instead of individual stocks.
Yes, exactly. Right? It's exact. So buying the ETF, you get exposure to the sector. You're not subject to the risk of buying one stock. And also, but it's even more dramatic than an ETF, because let's say a big Canadian bank or a big Canadian company, it's pretty easy to buy their shares, or even a small penny stock, it's easy to buy their shares. But a flow through share, it's a niche within a niche. And how are you going to find out that it's like most investors? If you say, oh, you want to buy flow through shares, well, how are you going to find out that who's selling flow through shares? How are you going to do it? Where are you going to go to get the information to know that this is even available? Unless it's a relative or a professional contact, probably you won't know. In fact, I'll say probably, unless you're in this business, you've probably never even heard of flow through shares. So it's much easier to go with a fund than digging up the information.
Well, that's the whole purpose of us empowering physicians and other incorporated professionals. Especially this episode is just to let people know, hey, there has this thing been here, just that because you didn't know, your accountant didn't talk about it, your investment advisors, nobody talked about it, doesn't mean that you should not know about it, because it could be critical to you by the end of the year. That's what we call this year end.
It's critical to you. It's a critical, yeah. And also I would say, if you're not aware of it, I'm not going to say invest in it or not. I think there are, for some people in a certain financial profile, it could be a very smart thing to look at and to consider. Check with your accountant and your tax advisor to see, based on the specificity of your profile. But let's say if you do nothing, let's say you earn whatever, 200,000, 300,000, 400, whatever it is you earn, if you do nothing with that top few $100,000, or even top 50, whatever, if you do nothing, you pay half of it to the CRA. You pay half of it to the CRA. Is it worth considering an alternative to paying half your income to the CRA? Look at it, again, check it out, get informed, talk to your financial advisor. The answer for you may be, don't like it, I'd rather do something else. But if, let's say, you want to go invest in an ETF, an S&P ETF or a REIT, or that's with your after-tax dollars. So you've taken it. If you want to put your money in an ETF or a REIT or S&P something, you're doing that with after-tax dollars. You're doing that after you've taken the 50% hit. So I would say if your financial advisor is not mentioning this as a possibility to consider, well, maybe ask them, it might be worth asking them to tell you more about it.
Yeah. So Nicholas, that's a very good point. So throughout the theme of empowerment, our empowerment brand, we have lots of educational platforms, right? Be it live conferences, masterclass, this podcast, live webinar. We always emphasize that at the end of the day, we empower you to ask smarter questions.
Yes.
Right, to advisors, right? So there are people who only chase one thing and one thing only, and I'm talking about most of my colleagues, right? They talk about one thing is the rate of return. Well, what is your after-tax rate of return, right? Sometimes if you say you make extra 10% and then 5% is gone, then it's not sexy anymore, right? And people don't think about it because you get your professional income, this big lump that gets you up to the 50%, the top of the mountain. And then they keep chasing more almighty returns, or in my space, well, real estate, something you sell something, suddenly there's be capital gains, you exit the program. Suddenly you get this ginormous thing. And it's not just you're losing money in the 50% bracket, it also eats up your small business deduction in your PC. Then you're having huge double loss, right? So definitely the reason I put it in October, because this is a good time, because by the time you think about it, talk to your accountant, tax advisors, whoever they are, and you're going to go and buy some flow-through shares. Sorry, the year is over, right? So that's why I think this is now a time to at least get some synapses going.
Yeah.
Right? And the thing about, and I'm not saying that it's for you, it's for me. I have been in this space for over a decade, and I'm weighing out, this is just me, it doesn't reflect anybody else. Right, the pros and cons, and for the tax benefit I had that time 10 years ago, definitely paid off. Right, at the end, there's some risk, there are good years, bad years, but everything turned out. I'm extremely happy a decade later. Right, so it's not a theory anymore.
Very happy to hear that, and also I just heard our portfolio manager today saying, let's say critical mineral. We're talking about critical minerals. Critical minerals are hot right now. They're doing really well. But let's say in a year or two, critical minerals are not doing well. Well, should you still do flow through? Basically, he said, well, if every year you pay taxes, consider flow through, because you can't time the market. Nobody knows what's going to go up this year or down this year. But if you do it over time, there's this, first of all, the tax benefit, and that's the main reason people should consider flow through, is the tax benefit, the tax credits, the huge tax savings. In a way, the government is subsidizing 60% of your investment with the income deduction and the tax credits. And there's the potential upside. But this is a thing, to your point, consistency. This is a thing you want to do every year, because some years are going to go, some years are going to be bad. And hopefully, if you invested the year before and the year after and the year after and the year after, well, hopefully the goal is, and that's in our case, that's what we've proven, that's what our numbers show. Yeah. We've been doing this for 17 years. By far the majority are the green, by far the majority of our years are green, a small number are red, and the green numbers are a lot higher than the red numbers. So people who've been...
So this is just a good old principle of dollar averaging.
Yeah, so people who've been with us consist every year for 17 years, they are doing very well.
Yeah. Okay, so thank you, Nicholas. This is good. So I guess that's enough. We don't want to deep dive further than this. Now, this is the end of our episode, but for select a few that wanted to join us for a masterclass, we'll do a more deep dive into the tax planning, using year-end tax planning and using flow-through share as part of your whole toolbox, right? How you can dismantle this tax load of yours. I'm actually in one of those years, I really needed some really good tax write-off. So yeah, so thank you very much, Nicholas. This has been fun.
Thank you.
And for those of you coming in a couple of weeks, Nicholas will do a much deeper dive into the nitty-gritty, the granular side, how that, and with some examples, how incorporated individuals like you and me could really benefit as a year-end planning tool.
Thank you so much for listening to the Position Empowerment Podcast. If you're ready to take those next steps in transforming your practice, finances, or personal well-being, then come and join us at phisempowerment.ca, PHYS empowerment.ca, to learn more about how we can help. If today's episode resonated with you, I'd really appreciate it if you would share our podcast with a colleague or friend, and head over to Apple Podcasts to give us a 5-star rating and review. If you've got feedback, questions, or suggestions for future episode topics, we'd love to hear from you. If you want to join us and be interviewed and share some of your story, we'd absolutely love that as well. Please send me an email at kmilo@phisempowerment.ca. Thank you again for listening. Bye.